Ladies and gentlemen, good afternoon. I am Alexandros Sarigeorgiou, Chairman of the Hellenic Association of Insurance Companies and Chairman and CEO of Eurolife FFH. I would like to welcome you to this last session of the Insurance Europe Resilience Week, co-hosted by Insurance Europe and the Hellenic Association of Insurance Companies. As I mentioned during my opening speech a few days ago, we would have very much liked to have hosted you in person in Athens. But nonetheless, I believe we have had an extremely interesting and productive week, notwithstanding this virtual format. I would also be remiss not to thank Mazars for their very kind and generous sponsorship of this Resilience Week. As I mentioned, this last session will deal with lessons learned from the pandemic. I'm sure that now, a year and a half, almost 2 years after the pandemic started, we are much the wiser, both in our thinking and hopefully in our practice. And we are wiser to the fact that the world can literally change overnight. It can change due to future global events such as health events, such as pandemics or cyber attacks or climate action failures. So to deal with and debate this very interesting matter at the close of this Insurance Week, we have today a panel of extremely distinguished speakers. First, there will be an introduction by John Berrigan, Director General of DG FISMA of the European Commission. And after John's introduction, there will be a debate between Oliver Bette, Chairman of Allianz SE, and Stéphanie Yon-Courtin, Member of the Parliament Renew France. So with this short introduction, I would like now to call John to this virtual floor. John?
Thank you very much, Alexei, and good afternoon, ladies and gentlemen. My great pleasure to participate in the Insurance Europe Resilience Week and to open today's final session, I think, on lessons learned from the pandemic. Perhaps the most obvious lesson learned from the COVID-19 experience is that society is indeed highly vulnerable, and perhaps more vulnerable than we thought, to events that can be disruptive on a very large scale. And such events are, of course, not confined to the health sector. We are also experiencing a period of more structural change in society. In particular, we have a process of digital transformation, which actually accelerated during the pandemic. And accordingly, the risk of cyber attacks will intensify in the post-COVID environment. The pandemic, I think, has also focused minds on another great challenge of our time, which is the fight against climate change and the broader degradation of our environment. And in my brief remarks today, I will touch upon each of these challenges relating to the pandemic risk, cyber risk, and environmental risk, and explore how the insurance sector can play a key role in addressing those challenges. So let me start by talking about lessons learned from the widespread business interruption in the EU caused by the COVID-19 pandemic. These lockdowns were necessary to manage the health crisis, but of course they have inflicted massive economic damage. And the experience of lockdowns has shed light on several issues regarding the insurability of large-scale business interruptions. One very immediate issue has been the existence of ambiguity in insurance contracts. This has created frustration among policyholders and reputation risk for the insurance sector. So obviously there is a need for clearer, simpler information on insurance products and guarantees offered to policyholders. And as already indicated by Commissioner McGuinness, the Commission services will work closely with EIOPA to foster insurance product oversight and analyze consumer needs and trends in the post-COVID environment. But looking further forward, it's important also to explore insurance solutions that increase resilience to pandemics or similar events. Such solutions could include incentives for better coverage of non-damage business interruption risks in insurance contracts. I'm also aware that some stakeholders argue in favour of a common EU solution based on public-private partnerships and drawing on the experience of national schemes that cover other risks such as terrorism and natural catastrophes. This is interesting, but I want to urge some caution here when we're looking at the feasibility of any type of action at EU level. The costs and benefits of insurance coverage mechanisms, which would require large financing from member states and possibly even a direct role from the EU, should be evaluated very carefully, especially in light of the unprecedented fiscal cost of the measures put in place to manage the COVID crisis so far. This, I see, is a very complex debate. It needs time to mature. It not only involves an evaluation, of course, of likely impacts on public finances, as I've mentioned, but also an evaluation of the capacity of the insurance sector itself to participate in such partnerships. Another issue post-COVID will be the financial capacity and willingness of businesses, particularly small businesses, to buy new insurance products in the post-pandemic world. The costs and benefits of such products will need to be looked at very carefully. And of course, we must look at what our society should do to be better prepared for such systemic events through risk prevention measures, for instance. So all of these issues will need to be debated in much more detail, and it will involve issues that go beyond financial service and well beyond the role of insurers. Let me now turn to cyber risk. As I mentioned earlier, one important consequence of economic lockdowns has been an acceleration in digitalization. This is a good thing, but with increased digitalization comes a corresponding intensification of cyber risk. The financial sector, including insurers, was already very familiar with cyber risk, being one of the main users of ICT infrastructure before the pandemic. Our legislative proposal, I should say, on digital operational resilience in financial services, or DORA as we call it, will contribute to strengthening robustness of the financial sector, including insurance and pension providers, against such cyber attacks. DORA will establish a framework that is in line with international standards and best practices on cyber and operational resilience. All financial entities across the EU financial sector will have to develop capabilities to test, detect, and prevent and limit the impact of ICT-related incidents, as well as to respond and recover from such incidents. Under DORA, reporting of major ICT-related incidents is streamlined and harmonized, and then critical ICT third-party providers will also be subject to an oversight mechanism to ensure a collective monitoring of their activities at EU level. So this is how the insurance industry within the financial sector can protect itself. But of course, there's also an opportunity for insurers to contribute in another way to resilience against cyber risk. We note that the uptake of cyber risk insurance is growing, and it's accompanied by increased awareness and preparedness for preventing security breaches in IT systems. So here, insurance, as in another area I'll come to in a minute, has a double role to play. So it's clear that lockdown has removed much of the inertia from the digitalization process. This process will certainly not be reversed and is likely to continue at pace in the post-COVID period. So we need to be more digitally resilient than ever before. And finally, I want to say a few words on the third risk I mentioned, that's environmental risk. The evidence is clear that environmental degradation is producing more frequent and severe natural disasters. That is why I think we must transition to environmentally sustainable economic development. And again, the insurance sector can play a double role in managing this transition. As institutional investors, insurers have huge potential to finance the transition. We're taking several actions to enable investors, including insurers, to identify green opportunities. First, we have a taxonomy, which creates a commonly agreed standard for the identification of activities. Second, corporates of a certain size will be alignment making this information available to potential investors. And thirdly, we have a set of tools, including benchmark indices, standards, and labels, all of which will facilitate the identification of sustainable investments. These three building blocks will facilitate the flow of investment into sustainable activities, and insurers, as large institutional investors, will avail of those tools, I hope. But of course, we cannot reverse all of the environmental damage that's already done. In particular, society will need to become resilient to the negative impacts of climate change that has already happened. And insurers clearly have a role to play. Well, they can support their clients in better understanding the risks underlying their activities or assets. Think about risks today to be able to withstand losses tomorrow. This has already been acknowledged in the first set of taxonomy criteria, where insurance is recognized as an activity that can enable adaptation, I should say, to climate change. Likewise, insurance was mentioned prominently in the Commission's strategy on climate adaptation in February of this year. We also touch on this point in the next phase of the Sustainable Finance Strategy, which is coming your way in the next few weeks. At the moment, most of the losses from climate disasters are not insured. Therefore, it appears that there's significant potential for greater coverage of climate disaster risks by private insurers. And the Commission intends to engage in further discussions on how to better tap that potential over the coming years. So as my time is running out, I will conclude by just recalling that enhancing our capacity to manage risks and challenges originating from systemic events, such as the pandemic, has moved to the top of the international agenda, not just the EU agenda, as we've seen from the G7 meetings underway this week. And that policy agenda relates, of course, to financial services as well. Pandemic risk mitigation, cybersecurity, and adaptation to environmental changes have been identified as key systemic risks. The design of mechanisms to enhance protection of society against such risks will require much debate in the coming years, and that debate, of course, will involve centrally the insurance industry. So in that context, the Commission looks forward to further discussions with the insurance industry and stakeholders on these very important aspects. I will stop here, and thank you very much for your attention. Thank you.
So again, thank you, John, for this very nice setting of the stage for the debate that is to follow. You touched about issues about insurability, public and private sector cooperation in the face of risks such as the pandemic, financing and affordability of the relevant insurance, but also cyber risks and the role that we have to play as insurers and as investors in the transition of the economy to a sustainable economy. So with this, I would like now to ask the help of my of the participants to the debate, of Oliver and Stephanie, to deal with the subject of the pandemic and the lessons learned. So yes, we've learned many lessons, and we've learned many lessons under pressure. And it's not only insurers, but it's also people on the street, policymakers, businesses, societies. Now we have to digest all this and come up with solutions. So I would like to ask, maybe I can start with you, Oliver, to start the discussion, if you could, in one sentence, summarize the key resilience lesson that you have drawn from the pandemic.
Yeah, thank you very much. Normally, I would have said ladies first, but I think in the modern world, we are changing. But anyway, thank you for giving me the floor. Thanks for our
first.
Yeah, and Greek colleagues for hosting us, even virtually. I had the pleasure to spend the weekend on your beautiful island, Mykonos, so I have at least been close to where you are without being physically present. Now, on a serious note, and I think it's important for our background, we haven't had an event like this since the Second World War, something that has affected almost every human being And it remains important to memorize that that has been an outstanding event in the true word. And therefore, very few people were prepared. Now, insurance companies are actually designed to deal with the sort of unthinkable and pre-important. And by and large, it's very important. The industry has done extremely well. And you know, it is really interesting what you read in newspapers in some countries versus what the facts are. I can tell you the highest customer satisfaction that we, by the way, measure every month, we have had in 2020. So let me repeat that, Alexandros. Maybe also interesting for Stephanie, because France is a little bit of an outlier there as a country. The highest customer satisfaction that we had in our 131-year history for our company as measured in Net Promoter Score, we had last year. By the way, it was also the year where we had the highest employee satisfaction in the history of our company by a far cry. So what you see in the crisis, that communities pull together, and when you have a strong partner, this partner is needed. So the first one, we need to think about resilience a lot more than we did in the past. We're coming off 20 years of uninterrupted economic success, except for the financial crisis, and that was due to some greedy bankers on Wall Street. But the reality is our societies are and have been very fragile, and we've just learned that that fragility is not going to go away, whether it's climate change or cyber, it's going to increase. So we need to deal with that and don't treat it as something that is going to go away. We can go back to where we were before. Second, as an insurance industry, to be more concrete, the issue is that our traditional product design principles have been really tested. What do I mean? Many people on the street did not understand what our products do and what they don't do, what can be insured and what cannot be insured. And to be self-critical, we have to do a much better job as an industry to explain how our economics work and what we can do and what we can't do. We cannot insure a terrorist attack with a biochemical bomb. We cannot insure properly the explosion of an atomic power plant, and we cannot insure a government-induced business interruption policy. It's just not insurable. If a government decides on Mondays to shut down the economy, that is not something that you can calculate as a premium. It just doesn't work. Now, we have to do a better job to explain to humans what can this industry do and what it cannot do. And that is very important. And I think Alexandros, and I would include all my colleagues, we have to do a much better job to explain to our policyholders what is it this industry can and cannot do, because we don't have the capital, let alone the risk transfer mechanism to shoulder an event like that. And there's not an excuse, because in other areas, like in health and life insurance, for example, we are very well equipped to finance, to calculate, and to run the exposures. So that's the first statement I'd like to make. So it's not just the size of the exposure, but it's not diversifiable. Again, as I say, if governments decide one day to the other to shut down the economy, our industry, with all its resilience, cannot shoulder that burden. Whatever politicians may hope for and whatever policyholders may hope for. And if we have left societies with the impression that we can do that, we've not done a very good job to do that. So that's the first observation. And we have to improve in terms of explaining to people in simple language, this is what we do, this is what we can do, and this is what we cannot do. And this, by the way, if I may say, does apply also to cyber risk. I think the expectations in terms of what our industry can shoulder have to be right-sized, and we have to do a much better job to explain what is insurable and how. And the same thing is around climate change. When people build a house in Florida on the beach, the only thing that can be insured is a government fund. The private industry should and cannot expose and insure something that has a loss probability of 100% at some point in time. So the real economic premium would be too high. If politicians want cover, then they have to finance with tax money, and they have to explain to people in the inland that they're taking the tax money to protect people having nice luxury houses on the beach. So it's also something we need to do a much better job on. What can you do in terms of hurricane and storm and other climate-related risk, and what we cannot do? And last but not least, there's a lot that we can do, and that is help the green transition, as we just learned, because we're not just insurers and large capital pools, we're also the most relevant long-term investors on the planet. So the way we invest our money is going to be essential in terms of driving climate change. And you know, Alexandros, that Allianz has been on this for a long time. By the way, Allianz has been net zero for a decade, while people are still start to talk about it. So this is something we can and we need to do, help the transition into a CO2 neutral world as quickly as possible. That is something that we can really do, but we need some regulatory help to do that. So that's my interest statement, just to make sure it's not clear today what this industry really can and cannot do, and that's the first question we need to ask.
Thank you very much, Oliver. Insurability, clarity, and reputation risk for our industry are, I think, the issues you touched upon. They are all very critical. It would be very interesting to hear your viewpoint, Stephanie.
Yeah, thank you very much. Good afternoon, everyone. And many thanks to Insurance Europe for organizing this crucial discussion. My one sentence for the lessons learned is we need to build trust. Thanks to dialogue. So in addition to insurability and clarity, I think trust is key. I'm sure the audience has already heard the anecdote I'm about to tell, but to me, it's a striking example of what we can improve. In July 2020, in the middle of the pandemic, I was meeting with entrepreneurs, a lot of SMEs from hotel, restaurant sector in Normandy and tourism, close to Deauville. With Alain Griset, the French Minister for SMEs, and all of them understood the necessity of stopping their activities temporarily to face the urgent sanitary situation. They were showing solidarity as well as all did during the crisis. However, they were frustrated by the answers they received when they asked about insurance coverage of this exceptional situation. And really, they felt like the only answer they received was, well, I'm sorry, guys, but we cannot help you because your contract does not cover pandemic risk and losses linked to lockdown. And that was all. And I completely understand that insurers were not prepared for such an event of global scale, and that it takes time to establish coverage and liabilities, and they cannot cover everything, basically. But I know that a lot of progress has been made in the past year since then, but back then, trust was eroded. That was, I think we should continue to rebuild trust thanks to dialogue between business, policyholders, and the whole insurance ecosystem, for the society as a whole after this COVID crisis. And I strongly believe this dialogue can be supported by, let's say, coordinated action at national and at EU level. So I think trust, in addition to insurability and clarity, is definitely important.
Thank you, Stephanie. Certainly trust and cooperation between the two sectors, public and private sector, is going to be critical for these types of risks. And maybe I can go back to Oliver and by way of asking how Allianz is providing covers and what kinds of covers for pandemic risks, and how do you see that also in connection to public-private partnerships as providing a solution in the cases where the private industry, as you mentioned before in your examples, simply cannot cover risks on events that are certain to happen?
Yeah. Well, they are certain to happen, I'm not sure, but they are certain to happen if governments decide. And then the question is, what is the, as we know, adversity of the outcome? If you have one party that has a certain economic interest and another one, and one dictates to the other, then markets completely fail. So you need, as a minimum in the world, public-private partnership, a certain understanding of what happens if a lockdown happens, what the rules are. And as we know, we are a leverage industry. That means we have a capital ratio to revenues, you can call also to liabilities that are leveraged, which means that we need to protect our capital very carefully, otherwise the industry is very quickly bankrupt. So having a rule of law, very clear rules of what you pay and what you don't pay, is not about arbitration at a table and says what would like to do tomorrow, but has to be clear on the outset to price risk properly. And again, we can do a much better job to do that. But let's be positive. We do cover life and health because the rules are much clearer than they were on business interruption. So there's something that we can improve upon. The second one is think about credit insurance, where for this year, much better than last time in the financial crisis, together with the governments. By the way, France, I would point out as one of the best in Europe, but also the German government has been able to extend a cover for the credit insurance industry in order not to have an amplification in a downturn. By the way, this has cost us, Allianz shareholders, 100 million last year in profits that we have ceded to the German government in exchange for providing the cover, that we held the lines open. So people were getting credit insurance that normally would have not getting credit insurance. And it was only possible because the government spoke to the industry very early. I spent a lot of time on that in Germany, not so much in France, making sure that the lines as much as possible were open for sectors that were clean before and that were affected by the pandemic. So it's a great example of what can be done if people work with foresight and think through what can be done. And this is a good area. And again, terrorist cover is one, another thinking about atomic power stations is another one. So what we need is foresight. And just to echo what I've heard before from Stephanie, is that builds trust because people know what is going to happen if we have a problem. What rarely works if you're trying to sort of real-time problem solve by shifting money from one side to the other, because people do not understand why and what is happening. And trust is obviously, as you said, very important, but that is built through telling people what you're going to do and then doing it when it happens. Yeah. So that there's something we would say. Going forward, again, it applies to cyber and others, is making sure that people understand what the industry can and cannot do. Sorry for repeating it, because as you experience the cyber events, we cannot insure the internet, for example, and a lot of cyber risks are today not insured. Nobody is even thinking about it. Think about a simple fact. How will we deal with self-driving cars? Across Europe, there is no answer on if something happens, if somebody hacks into a self-driving car and creates an accident with 20 cars and 40 people die, who's going to pay for that? And how is that, is that the guy that built the car? Is that the people that operate the self-driving system? Is that the driver? Who is it? So all of these things that are coming need to be addressed, and then, to be honest, need to be addressed much faster. So we need to live in a world that adapts more quickly than we are used to adapting. And climate change will be no exception. Last week in Germany, we had massive floods that people haven't seen in a lifetime in a very short period of time with rainfall that you normally only experience in Southeast Asia. And people have to get used to the fact that we will be living in a more dangerous world, and these things have to be clear. What do we do and what do we not do? And the other thing is also clear, Alexandros. We still live in a society in Europe where people are aging, they believe things are for free. The state will save me. Somebody will pay. Well, guess what? Wake up. It doesn't work like that. We need to think about how do markets function and how is the price of risk being determined. And if people don't have cover for example, flood risk, they shouldn't be surprised that at the end of the day, there is nobody other than going to mama or papa state and to say, can you please bail me out? We are convinced that is the least preferred option.
Oliver, regarding your comment on the state, I was in the position this summer to have to explain to very shrewd businessmen otherwise that first you have to buy insurance and then you come for the claim. If you're not insured for business interruption, don't come to me, when half the house is burned down, right? But your points bring up my question to Stephanie, which is, what is your take as to the role that the public sector should play regarding pandemic risk or any of these other risks that are emerging that are all bunched up together? They're not coming every 100 years a new risk. We're seeing different kinds of risks every few years now.
Yeah, well, as a member of the European Parliament, representing all European citizens, my role is to ask the right questions and to look for right answers in dialogue with all stakeholders. So, and I definitely believe that public stakeholders have a role to play. I think we should already welcome the fact that a discussion on the topic of pandemic risk is happening. And I took the opportunity to raise this topic with many stakeholders already, including with Mary McGuinness, head of confirmation as a FISMA commissioner, with Petra in Kelma, as she was confirmed as our new IOPA chair, and during an OECD event conference last March. And you can trust me, every step of the way, I'll remind my interlocutors of the importance of the topic for European businesses and citizens. Of course, the discussion will take time, and that's a bit the trouble, I think, because we speak about it, which is a good start, but we need to act also. To quote the chair of the IMF, Robert Ophel, we know that the EU decision-making process has a slow and majestic tempo. So we have to be aware of that. And I think that EIOPA has established a strong basis for future discussion in its staff papers on this topic. The four topics, of risk assessment, risk prevention, product design, and risk transfer, and good funding principles. They are good funding principles. It's a good start. I will be definitely looking forward to the results of the internal commission reflections on a potential solution at EU level, because I think we have to take stock of what is happening nationally to make sure that we, develop best practices at EU level. People wouldn't understand. I think for insurance companies as well, it's very important to provide for more legal certainty and avoid any fragmentation of the market of insurance. We cannot do that. We have understood that I'm strongly in favor of involving the public sector in developing a pandemic risk insurance solution where everybody bears its own responsibility. Because I think it's not only the state, I think everybody needs to be responsible for something and for that. And this does not mean that the public sector will do everything or will force the industry to do everything. I think it has to be a dialogue, a cooperation where everybody acts according to its own competencies, but the public sector has a key role to play to ensure that trust, again, I'm repeating it, will be rebuilt in the long run. Without trust, we can speak, but we will be prevented to act. So trust and then action.
Stephanie, I fully agree with you. If you permit me to say, just as we are responsible in the private sector of being very clear on what we cover, under what terms, and what we do not cover, it is very important also, because Oliver alluded to the mama and papa state, from the political side, to be clarity to the people of what the state can and cannot do. Because after all, at the end of the day, taxes is also public money, and there's no free insurance in the state. Having said that, I would like now to move to the next section, which is a section which I think is going to be very interesting, because I would like to invite the audience to participate in a poll that hopefully you'll see on your screens right away, and you will have 40 seconds to answer the following question. Any public-private partnership solution for pandemic risks at EU level would be the first of its kind. Do you believe that such an EU solution should be found? So we can start. You have 4 answers to pick out of, and we can start now for the next few seconds. So as I can see on my other screen here, answer number 1 is getting 40%. Any solution should be at EU level to ensure that all member states are covered equally for future pandemics. And then we have number 2 and number 3 pretty close at 28 and 25%. 28% is yes, but it must take a bottom-up approach and build on a network of solutions that must be first devised at national level. So this is the second answer, but it seems that there's a clear preference for answer number 1. So, Stephanie, would you care to answer, to comment on the answer picked by our audience, by 40% of our audience, which is that any solution should be at EU level to ensure that all member states are covered equally for future pandemics. And then Oliver, please.
Yeah, thank you, Alexander. Well, I think these 40% of our audience are fully right. I do share their point of view as an MEP. And not only as an MEP, you know, I strongly believe that an EU initiative is needed here, is very needed. We already see the role that the European Parliament, IOPA, and the European Commission play in raising awareness on this topic and kind of framing the debate. So I think this is key. It's a good start. And our businesses are operating, as I said, in a single European market, which is a good thing. And we have seen in the recent past the devastating effects of a lack of cross-border enforcement of insurance supervision when companies lost their coverage that was managed from another EU member state. But of course, this EU framework should not be a one-size-fits-all. It should be built on common principles, which should be adapted to specific situation in every member state. So I think the idea also, you know, on this bottom-up approach and the fact that it has to be built also on a networks of solutions that must be devised at EU level, I think we need to have a clear interplay and articulation with the national situations and levels. Current initiatives such as, you know, the French CATEX proposal could serve between any others, but they could serve as an inspiration. But we should carefully assess whether they are suitable for the whole single market and whether they are effective. One thing is to develop solutions. The other is to make sure the solutions are efficient and effective concretely, because otherwise it will be a catchphrase, you know, oh, great, we'll have a solution, but if it doesn't work, then it doesn't work. So in short, yes to a European solution based on common principle and no for a one-size-fits-all approach.
Thank you, Stephanie. Oliver?
Yeah, this is a little bit like, you know, making a circle a square. So I totally agree with Stephanie that we need a European solution. The problem that we have seen, and again with COVID, financial crisis was the same. That is like in an airplane, when you have a loss of air pressure, everybody puts their own mask on first, and then they worry about the other people. And what we've seen is going back to single member states rules, even though they break with European law. So what we need, if we have European solution, as Stephanie said, they have to be effective, but it means they have to be enforced. Let me give you an example. 3 or 4 countries in Europe decided by themselves against the European law, you can't pay dividend. The national regulator, central bank says you don't pay dividends. Others said no. So we have a law, by the way, for a decade now that says you can sell one product from one country into another EU country if it's approved. Well, some countries say, yeah, that's the European law, but we still don't respect it. We have our own rules. So, and that's what we, by the way, as Born European, Allianz SE was the first, by the way, in 2005, European company. We believe if Europe is to be effective, we either have to have national rules or European rules. If you're just piling them on top of each other, then Europe will lose respect, efficacy, and trust of the people, going back to Stephanie's point. So if we have European rules, there have to be European rules, and they have to supersede the local rules. This is the worry I have as a European, or feeling as a European, that we are just having a pick and choose approach. If one country doesn't like it, if we don't like the freedom of the press, we don't have it. If we don't have the freedom of justice, we don't have it. If we don't have free election, we like them, we don't have it. That Europe cannot work. So if we have a common framework, it has to be able to enforce. This, by the way, sorry to say, it's the same with debt. If we want to raise money at the European level, so be it, but it means we have to raise less debt at the national level. We cannot issue, I have 2 children that are very worried about this. We cannot just constantly pile rules over rules. I think many of our people are frustrated about Europe, which is not the problem of Europe, it's the problem of the member states not being disciplined. So I suppose, Stephanie, but let's then have the rules and make sure you can enforce them. By the way, we have a great track record in enforcing European rules and many things exceptionally well on anti-competition. Think about Mario Draghi, what he did, making sure we have competition. So that's really the ask I have. By the way, last comment on this poll. Obviously, we have all the people that are interested in Europe dialing in. Guess what? They vote for a European solution. We should talk to the guys who are not dialing in.
Thank you. I'm looking at my watch here, and as I think the next segment that I had in mind has been largely covered, I would like to skip over to the role of regulation. Because when you're dealing with difficult to insure risks and boosting resilience to those, is there anything that could be tackled through regulation? Or is there any regulatory barrier that prevents insurers from offering more protection? And obviously, Oliver mentioned capital. I mean, we manage capital for our investors at the end of the day, so regulation has a very important role to play, but at the same time, there are investors who can be very agile from one industry to another. So I would like to start with you, Oliver, on regulation and the role in this situation.
Well, I think we often use, we can be amongst ourselves, we often use regulation as an excuse for not doing anything, right? Our industry says, I have this regulation, I can't do much. So let's leave that aside. Let's be a bit practical and says there's a lot we can do. We talked about, Stephanie mentioned at the trust point, our wordings have to be a lot clearer. So regulating what we do with the consumer should be principle-based, and there should be a simple test. Does a consumer understand what he or she is buying? It should be a simple test, which we now do. We haven't done until about 5 years ago, and we test it. Now, do you want policemen to enforce it? I'm not so sure, but we should be moving to principle-based regulation that looks at the simple outcome is, how is customer satisfaction? What do people really believe? Do you have negative surprises on claims? That can be easily managed. Now, to be more concrete, on pandemic risks that are very severe economically, but hopefully very rare to happen, a lot of our capital models, Alexandra, as we know, that do not work because the tax man doesn't want us to store too much in our balance sheets in terms of reserves, and that goes totally against what we need to diversify, which means, as Keynes already said, save in the good times to have money for the bad times. So in the pooling areas, what we do for terrorist attacks, we actually do create funds that are very carefully protected. And I believe we need, for very large risks, we need to have reserves set aside, not equity capital because it's too expensive, but real reserves that we save for floods, we save for storms, and today that is too limited. So if somebody in the parliament wants one practical proposal, make sure the industry not just talks about it, but sets money aside for the rainy days. That is carefully calculated, that is not available for other items, but is there when you need it. That is the key issue I see in our industry today. We always say, yeah, reinsurance will diversify. No, reinsurance cannot diversify systemic events. So for systemic events, we need pools. And at the end of the day, as you said, Alexandros, tax money is not for free. So if you want the capital market to do that, we need to set aside reserves for the day when we need the money. It's a very simple thing. We can compute how it is, but we need to tell the finance ministries it is required and it's not tax evasion. Just to give you the one idea.
Yes. Thank you. Stephanie, would you care to comment?
Yeah, I took good note of the comments from Oliver. Sorry, I'm speaking in French. Sorry, nobody's perfect. So I took good note of the comments from Oliver and on what could be tackled thanks to regulation and what could be potential regulatory barriers in his view. As I mentioned before, I think the role of policyholders and the governments is to lead and frame the discussion on risk that may look difficult to insure at first sight. And consumers and policymakers as well will not accept no for an answer. What I mean by this is that we would very much prefer to start a discussion on how to identify and manage those risks that are difficult to insure rather than hearing, well, we cannot do it. It is for the public sector, to take care of it. So I think we already know that this will not be a walk in the park. insurance coverage is very linked to national and even regional cultural sensitivities in the EU. So it's very diverse, it's very cultural minded. This makes full-fledged regulation more difficult to agree. But if we all agree on the ultimate goal, which is to protect European citizens for all future macro events affecting businesses, then I'm sure we can maybe get around the table and find solutions together. After all, as an MEP, I've come to enjoy this situation where, consensus seems impossible or, difficult to find, but in the end, we managed to find a solution working for all. So I think we should try.
Yeah, I agree wholeheartedly.
Please.
By the way, again, Alexandros, as a self-criticism, if you measure the relevance of our industry, the insurance industry, as a share of the GDP, it has gone down now for 30 years in a row, because we have, with the move from a manufacturing-based economy to a service-based economy, we have not been able to capture the non-material goods and insure them properly. So we as an industry have to do a much better job to think about, intellectual property and other items and make them insurable. However, and I say that also Stephanie can help, other industries have ways to do innovation together with regulators. And one of the problems we have, Stephanie, today is if you as a manager of an insurance company make a mistake, I'm not talking shareholders, in terms of trying out covers that don't work, and you get a big lawsuit, class actions in the court, you stop doing that, right? So we also need to then incentivize, maybe have dedicated vehicles that try out things that we know will not work perfectly. And my favorite example is actually the development of the COVID vaccine. The mRNA was something that was around as an idea for 20 years. And because everybody worked together, we were able to do something in 1 year that people couldn't think was possible in 10 years, right? So if we want a solution, we really have to work together. And most often I have to, respond to a regulatory proposal rather than talk about innovation. And therefore, it would be great if we spend a lot of time more on how to create new products and rather than, let me regulate you that you don't make a mistake. That unfortunately leads to an industry that doesn't want to take new risks.
Thank you, Oliver. As we are now in the last 7-8 minutes of our session, I'm going to try to combine one of the questions that I had prepared with a couple of the questions that I see that came in from the audience, and I would like to invite the audience to put forth more questions, and we'll see what we manage. But the initial question is that, and we touched on the subject before, is that this crisis, the COVID crisis, put forth the problem of understanding how insurance works for the general public. So then the question is, how do we make the public, is the public more aware now, or how do we make it more aware? And then there are questions that came in from the audience, and I read to you, what can businesses do to reduce their pandemic risk exposure and make risk more insurable? Corporate and agricultural businesses are very vulnerable to climate change, cyber risks, pandemics. How can the insurance industry contribute to mitigate the risk exposure? So you can see, I think this is, people on the business side saying, what should I do? What can I do? And have we learned enough, or what should we do as an industry to educate people? Would you care to comment, Stephanie, maybe? Or Oliver, I guess the industry speaks first, but I think it's also the public.
Let's start with Stephanie first, please.
Stephanie. Okay.
Thank you. Thank you, Oliver. Well, educating people is, I think, important, and indeed awareness from consumers of how our industry works would be ideal. But let's be honest with each other. I think consumers may not need to know all that is happening in the machinery, but I think rather what they can expect from the insurance product they invest in. I think that's what they want, they need. And I agree with Oliver. I mean, in exceptional times, we need to develop exceptional, techniques or new products and to test them. And somehow the crisis has been like, you know, an accelerator of developing new things. Well, this comes back to talking about understanding how insurance works and awareness. This definitely goes back to my first point about trust. And to me, trust can be rebuilt if it's based on 3 pillars. People need to know. They expect to know if they will be covered or not. So I think transparency is needed more than ever. Things should not be assurable, but they need to know it. Consumers need clear information on what is covered, what is not, and the cost of their contract in the long term. I think that's what matters to them. And based on the reaction from the consumers to this increased transparency, the industry will then be able to build, as Oliver said, new offers to answer these new challenges together with public authorities. Never against, but together. The second pillar, I think, is accountability, which is linked to transparency. Consumers should be confident that insurers will stick to their commitments on coverage and on cost. It cannot be that, you know, the coverage and costs change from year to year with limited prior notification and that policyholders are put against the wall, you know, with no recourse when changes happen. They have to know in advance. And this is, of course, an area where the public sector can intervene to ensure that insurance contracts are respected and to help with the clarification and potential gray zone. And at the end, dialogue is the silver bullet. Regular discussions need to happen between policyholders, insurance, also in good times, every time. Otherwise, the conversation only happens in bad times when policyholders are in need, and this creates, I think, unequal regulation and frustration. So if needed, this could be encouraged via public action. So awareness raising should be continuous rather than only a response of a trust crisis. This is, for me, the key lesson learned from the past weeks.
Thank you, Stephanie. Very well said. Fully agree. Oliver?
Yeah, very briefly, because we need to stay in time. I agree fully with Stephanie. There's one thing I would like to add. It is some things that can only be understood if they're simple. Our industry, the wordings are too complicated, and it's not just our own legal departments. When you go through a lot of regulation, it's very well intended, but a lot of crimes are happening because of good intentions. So having somebody read not just policies, but regulatory documents and says, can you understand this without a legal PhD? Maybe also a test for regulation to make sure it's practical. Second thing, and Stephanie understands probably because she was a mayor, so she knows that we need to speak the language of the people. The last item I'd like to make is, and that is for us, is what I would call fire drills. Stephanie mentioned that. We always deal with problems only when they arise, and then we're hectical. What we are learning on cyber, on other large risks, is very important to go regularly through fire drills and say, what is likely, Murphy's Law, what can go wrong eventually will go wrong. Why don't we annually have a dialogue around what do we do if, you know, Amazon goes down for a week? Maybe not so bad because we have less packages and traffic. But maybe going down Amazon Web Services for a week is not such a great idea. You know, how do we deal with that? And today, you know, we are regulated by the financial regulator, but they are not regulated by anybody, maybe by the telecom regulator. Who is making sure the system is stable? Our regulator says, you have to do that. How can I make sure that Amazon Web Services is stable, or Microsoft, whoever that be? So being a little smarter around, you know, what are the systemic effects, and do the fire drills before the fire actually happens is something that I feel is really important as we moved into a more uncertain world.
Thank you very much, Oliver. And I would like, I think, in order to be precise on time, we have 1 more minute. So for me, there's nothing left to say but to thank you. Thank you, Stephanie. Thank you, Oliver. Thank you to all the speakers, the distinguished speakers who took time to discuss this very interesting topic over the past few days. This brings the Insurance Europe Resilience Week to a close. I'd like to thank Insurance Europe and the Hellenic Insurance Association, and absolutely thank Mazars for their support. more than anything, I'd like to thank the people behind the scenes who have made this possible, and the audience who was with us all these days. I want to wish you all a good summer. Stay safe. Thank you all again. Goodbye from Athens.